Welcome to the Road to 100 Million in Real Estate podcast, where you'll benefit from the opportunity to learn to become a skillful real estate investor. You'll get guidance from top industry producers, operators, and investors who are eager to help you learn from their proven strategies of success. Now to your host, Dorrance Constant.
Hey everyone, welcome to another episode. As always, I'm your host, Dorrance Constant. Today, I've got another special guest on the show. I have Sam Self. Hi, Sam. How are you?
I'm doing well, Dorrance. Thank you so much for having me on the pod.
All right. For sure. Thanks for being on. And before we get into it, Sam, I want to make certain that the folks know more about you. Folks, Sam is an experienced chief executive officer, combat veteran, and serial entrepreneur with a demonstrated history of success in developing and building sustainable and repeatable systems, overcoming many of the key drivers of financial and societal poverty. He is skilled in innovative business planning, operational management, international relations, entrepreneurship, and policy analysis. He has a strong development background with a master's degree in healthcare administration and policy, global health focus, and an undergraduate degree in business strategy. He's invested across several asset classes and currently has $65 million of commercial properties under management. Sam, again, welcome to the show.
Hey, thank you for having me. I'm looking forward to it.
All right, for sure. Now, Sam, first of all, thank you for your service. That's number one.
Yeah, my pleasure. You know, we do it because that's what we do, right?
Wonderful. Sam, I'd love for you to talk a bit about, your past. You've got a demonstrated history of success and accomplishments, but I really want the folks to know more about you.
Yeah, I always, laugh inside, when I hear that demonstrated history of success. I think anyone who has a demonstrated history of success also has a demonstrated history of failure. It's just not broadcast. I don't put all the things that I failed at in my life on those, just like on your resume, and most other people do not. But Dorrance, as an entrepreneur, how many ideas didn't work out or how many worked, and then because you went left and instead of going right, it ended up being the wrong move. But you didn't know that back then. And of course, hindsight's 2020. I've really grew a passion for real estate as a young age, grew a passion for my country, grew a passion for God at a very young age. And those have been kind of my three main pillars in life. And they have been consistently. So in that, have been constant and constantly pursuing doing what is right, helping others around me, and creating systems that are sustainable, inexpensive, and deliver results. Now, results are, not always perfect, but life is all about learning and getting better and better and better. And so moving out, when I was coming to my retirement in the Air Force, I decided to come back into real estate. I still had some rental real estate from when I was doing fix and flips in the early 2000s. And decided to go into commercial real estate. And within my first two deals with my dad, we, in 6 or 8 months from when we started, we generated enough money for us both to retire with just passive income through mobile home parks. And that was like, oh my goodness, you hear about commercial real estate, you're like, what? I can't do that.
Right.
It's too big. I don't have enough money and all these other excuses because we just don't know. Nobody teaches us. And if you want to go to a mastermind, it's $1 bazillion and to network with all the right people, but you still don't know how to actually do stuff. And so we just went out there and we started doing it, and it's turned out to be incredibly good, and it's been incredibly difficult, huge challenges, but I am learned and am such a better businessman today because of those challenges. And it's been a wild ride. I look forward to many more years of getting out there and getting after it.
Wow, it's interesting. When you hear someone who's been in the service say that your real estate is difficult, right?
Yeah.
But that's a testament to how challenging the business can be, but also as well, just like in the service, how rewarding it can be as well, right?
Yeah, that's right. It's how many single family homes would you have to buy to become, where you can make $12,000 a month in passive income for the rest of your life? Or as long as you maintain those properties. That's really hard to do in single family. That's a ton of transactions, a ton of time. You can absolutely do it, and people do. A lot of people have made it in single family. It's just really difficult. And we did that in 2 deals. And we started, I had 30 grand, my dad had 50. So $80,000 between us. That was all of his retirement savings. That was all of my retirement savings. And we paid Mr. Taxman to do it. And we went off and we, worked our guts out, but we made it happen. And then since then, we've learned how to not work so hard and still make it happen. And there's a lot of, not corners you can cut, but there's a lot of shortcuts that can be made that only come from learning and becoming more savvy, as well as, being around others who have tried different things that have worked out really well.
Right, Sam. But wait, that's an interesting story, right? You said it was yourself, your father. You folks started with 30,000, I heard correctly, and 50,000 to begin. That was your savings. Yeah. You came from a background in combat and education, but you didn't have, let's say, the experience or education prior, right, in real estate, in that large form of real estate investing. So help us understand, what were the steps that you took to be able to, maybe even have the confidence to approach those bigger deals, the motivation to approach those bigger deals. And then what did that deal actually look like that was able to help? I mean, those 2 deals look like they're able to help you retire.
Yeah. We didn't retire, just ended up feeding my desire to do more. That's what happened. I should have probably retired. But as you know, as entrepreneurs, you're just like, oh, that worked, let me keep doing it, instead of being like, oh, I'm going to go live on the beach and do whatever I want, right? Because it's not about the money. It's about improving and helping and making a difference. And the money is a sign of success. It's the grease that makes the wheels turn and enables you to do more, right? If it was about the money, to Bezos, he never would have built. I mean, he would have stopped a long time ago because he made money. It's just about doing more. And so, so those first 2 deals, one was a 3-unit mobile home park, and that was like $70,000. We had 80 all combined. So there went all of our money plus closing cost. And we bought that, and that made us about $2,000 a month. And I found this other deal right at the same time. And because I'm brave or stupid, I told them, we got into a contract called a master lease, something I learned about on the internet from, I think, Commercial Property Advisors or one of those others who actually teach you how to do stuff instead of just talk about doing stuff and try to hype you up and sell you an expensive course. They actually taught. And so I learned how to do a master lease, how to set it up. And then we just negotiated it, having never done one. And we got this 42-unit mobile home park in Oklahoma that I still have. And it was run down, but we came up with $50,000 down and $50,000 for all the rehab. So the first 50 grand paid for the year's worth of leases. And then the second 50K went into all the mobile homes. And we went out there physically, mostly my dad, and did all the work, fixed these homes up and put renters in them. I didn't sell them, just had them rented. And that property alone generated $12,000 or $13,000 a month in free and clear cash flow 6 months after we bought it. And it was barely making debt service when we bought it. And so it just made a huge difference. And so a year later, when we came to finance the property, because the master lease ran out, as it turns out, we can go to a bank, and we got a bank note at, 4.5% or whatever it was. And because we had strong revenues, we put in $100,000 into the property. We took out 115 over the next 10 months. It was beautiful.
Sounds like a home run deal.
It was a home run deal. Mm-hmm. Now, COVID killed mobile home parks, at least infilling them with brand new homes. It just killed that plan because the pipeline got jacked up. And when that happened, we transitioned from doing mobile home parks. After we did 2, when we started making money, I learned about syndication, how you can pull together investors' cash and go after deals. And we started doing that. We ended up buying 8 more properties that year, but small properties, a whole bunch of small transactions. And we started doing all of the development plans. And then COVID came and just killed it. Like I said, the pipeline for mobile homes, and really hurt us on the business plans there, and the execution of the business plans. And so we had to regroup. But we also shifted at that time over into apartment complexes where you don't have to bring in new homes. All the homes are there. They're just distressed. And we went after that.
You started touching on that. You eventually started moving into syndications. you learned about syndications. Could you tell us about that process, talk to that point, and how that helped your business?
Yeah, we ran out of money on the first deal. The second deal, I refinanced my car because we had to pay it off, pulled some loans off credit cards and got a line of credit with a bank. And that's how we came up with our 100 grand for the second deal. So after two deals, we had $0, nothing.
Mm-hmm.
So that's why we turned to syndication, because in syndication, you pull together investors' capital. And I had never raised a dollar off of anybody before. I was terrible at fundraising as a kid, doing like, the book club thing where you sell people really expensive, like $50 things of popcorn, just ridiculous stuff that doesn't have very much value. Yeah. So I just never had done that. And we found it, I started to partner with a couple other guys. They found a really good deal. And then we just started doing the capital raise process. And all of a sudden I raised $300,000 with a friend of mine for a deal. And then at the last minute, the deal changed. And we had to raise another $300,000. And we did that all within about a month. So we raised $600,000 for our first deal, having never raised a penny before. And it was quite amazing. And we learned about syndication. We learned about the SEC rules and regulations. I got books, and I just self-taught through that and through experience what works and what doesn't work. If I can go back in time, I would punch myself in the face and say, Sam, a coach or a mentor, why in the heck are you trying to do this all by yourself? Because it was a struggle. We didn't structure those deals right. We didn't pay ourselves. Now we got this property that is not paying us anything, yet we have to do the deal. And so you're like, how do I make payroll if the properties aren't paying me anything because I structure them wrong? You know what I mean? And so now, just simple things like structure and appropriate fees and, how do you do all this without going to jail and all these other things that you can learn in books, but applying it in real life can be difficult. So now we know how to do that. Every deal we've done has just gotten better and better and better over time, better structure, better organization, better partnerships. And that's evident by, as we talked about just briefly before, our last project that we closed with an institutional partner. So a multi-billion-dollar company who likes us, understands what's going on in our portfolio, understands what's going on in our life, and joined us on a deal. And they brought $5 million. We brought 500 of our own cash and bought that property. And that property is we're just crushing it. And so it's taken us time to understand all those things and how to actually crush it and make a lot of money doing this. But if you get a coach or a mentor, somebody who's already gone out there and gotten all the hard knocks, lost all the hair, and gotten all the gray stuff, they can speed that time up from the learning curve by years and by millions of dollars more in profit too.
Absolutely. Now, Sam, you in your business, you mentioned you raised about $600,000. It doesn't sound like, for me, correct me if I'm wrong, that raising capital excites you.
It does and it doesn't. So at the core, I think what I really enjoy doing is creating systems, not like an engineer does who wants to know like 1, 2, 3, 4, step 4, step 6, step 75. C is this. Like, that's not my gig. My gig is to go in and solve a very difficult, complex problem in a way that it is becomes people's incentive to get engaged and involved. So I love distressed housing because an apartment complex that is severely distressed and neglected by owners is a very complex problem. Now, how do you get investors to come in? You can promise the world, like, well, I'm going to give you a 50% ROI, and investors will believe you because it's written on the paper and an Excel spreadsheet says that. Unless they're savvy investors, they're going to look at the documents and be like, you're way off. And you have to have an executable plan that depends on all these different factors. And you could do everything in your power. You could be the best operator in the world. But if one of these factors turns out not to be true, your whole thing could go up in smoke, right? And you can tell that to investors. They're not going to care. They're going to blame you. And, you had no control over that, but you didn't plan for that factor adequately. So the responsibility rests on your shoulders for not planning for something that you should have planned for.
Absolutely.
So, yeah.
Absolutely, Sam. And now, do you folks are you raising capital in-house within your organization, or you're, for instance, having investor relation teams, et cetera? Or help us understand how your capital raise process looks.
Yeah, so we do deal to deal, and we've raised about $20 million. And most of that I have done, or a partner has done, like either a co-sponsor or a partner on my team has raised those funds. We didn't really start taking on co-sponsors until probably almost a year ago. We started doing deals with co-sponsors where they would bring, I guess about a year and a half ago, they would bring, half the equity. We'd bring half the equity and then do all the management, and then we would split up. And they would handle investor relations or communications or something else like that. And then we would split up the management promote of the deal in accordance with our respective roles and responsibilities. That's pretty common. We just hadn't done it for a while. We did it all in-house, but I think now we're sitting at just about $20 million of total raised.
Got it. And Sam, you've also worked with institutional investors, right? So you've made that leap. So would you help us understand, or walk us through that pathway of working with institutional investors, and even what was the motivation behind that?
Yeah, so you can get into commercial real estate. There's different paths or tracks you can take to success. Like you can do it completely passive and become wealthy and financially free. You can become an active role and just raise money, capital partner, and do small roles in the deal. You can become an asset manager and receive equity in the deal. You can be the owner operator and have partners and you're doing it that way, or you do it all internally as a owner operator company and do it that way. Or you can partner with institutions and they bring a $20 million check. You bring a $2 million check out of Hyde. And there's pro tips about how to put that together. And then you guys do that collectively. Now, institutions, if you ever been into the military, you know what MEPS is like. Institutions, their due diligence on you as a person is kind of like going through MEPS, the Military Entrance Processing Station. Anyway, so it's a very, very detailed process. And I remember working with our institutional partner, and he said, Sam, on this podcast you were on, you said this, and this. Tell me about that. I'm like, you listen to my podcast? That's amazing. Cool. One, but two, like you're seriously doing some due diligence on me. And it's like when I went for my top secret, clearance, they talked to everybody I knew and so forth and so on. And so it's just like that same kind of process. And when you show them that you can execute the mission or do the thing, and you show them that you're financially sound, and you show them that you are a good human being who's not going to lie, cheat, or steal, as much as they can tell anyways, then they partner with you. But you've got to have you have to have all these systems in places, and you got to be ready for that. Most of them prefer vertically integrated. So you have your own property management, you have your own construction, you have your own asset management, all that in one thing. Retail investors, small investors prefer that you don't have vertically integrated because they're worried about collusion or, dipping your finger in the pot 7 times. What really happens is if you're vertically integrated, you're just cutting cost at 3 or 4 different things. And it's really good for investors, but they don't see it that way. And so it's easier to be an owner operator and not to vertically integrated because it's less of a headache. So you just turn everything over to third-party managers and you can blame them if something goes wrong.
Mm-hmm. Well, Sam, being that you've raised capital in-house and now you've also gained capital for institutional investors, what would you say as an investor, are the general pros and cons of raising capital in-house versus, bringing institutional money?
Yeah, great question. So really, I've talked about this before, like in some presentations at masterminds and other things. So most syndicators don't know anything about working with institutions. And generally, when people go institutional route, they don't ever turn back for a couple of reasons. And then our perfect our favorite strategy is a bifurcated model where you do institutions and retail investors. Retail being, hey, Dorrance, here's an awesome deal. Would you do 50 grand in this? Are you accredited investor, not accredited investor? Great, awesome. Hey, Joe. Hey, Sally. Here's the deal. So from my side as the sponsor, the pro of doing retail investors is I can charge a buttload of money on the front end of the deal. So you'll see guarantee fees that are 1%. So somebody's getting paid $400,000 for signing on the note. I'm like, man, I've been signing on these notes and I've never charged anyone anything. In the world. Am I not paying myself 400 grand like this other syndicator is? So the second one is you charge acquisition fees. You can get a really hefty asset management fee, and the return is lower overall on a syndication, but it's infinite because the owner operator could literally have $0 in the deal. What I see happen a lot is in syndications, they have $1.5 million acquisition fee, but the team is putting in $500,000 of their own money. And what they do is 500 grand goes in, 1.5 comes out. They made $1 million on the deal. Investors funded their $500,000 investment. Do they have skin in the game? Well, yeah, they want their 500K back, but is it really their 500K? No, they made it off in investors, right? And so that's skin in the game in that world. Now, you turn over into institutional, you have a very small amount of money that you make at closing. In fact, you're going to put in more money at closing than you're going to get back. And so real estate syndication, retail side is definitely, you make more money in the beginning. On the other one, institutional, you actually have to perform on the property to make money. All right. So like on this last one, 500 grand from our pocket, $5 million from the institution. So it was a 90-10 split. They got 90, we got 10. And then there's these waterfalls that make our performance fantastic because it's coming from a REITs and other big funds. They get capped at how much they will allow that fund to make. And then they take their 2% fee for running the fund. And then the profits beyond that threshold just get divided among these sponsors. So we put 500K in, we expect to get $7 million back. And so it's a 12x on our return on that deal. And we are already way ahead of our pro forma, even in this terrible market right now. Okay. And so like that, all about operations, all about performance, real estate syndication, third party, the whole thing. You make all your money at the beginning, send out investor reports that get generated by your third parties. And it's not quite that easy, but you can make it very automated, very systematized, and you can get very wealthy just by buying stuff, which is a very interesting model.
Interesting. And Sam, how did you end up connecting with these institutional investors?
Yeah, great question. When I started finding out about institutional investors, I had started working with a guy out of London who was very, very well connected. Eventually, I met a guy out of Florida who worked at institutions as a debt and equity broker, had been in big institutions, and I convinced him to come work for us full time. And the difference is working with us, we are friendly, we're kind, we laugh a lot, we do funny things, we have a great time at work. We all share the bad times, we share the good times. And in the institutional world, it was high pressure, high sales, all about numbers. People didn't matter. You have to hit your $150 million for the quarter. If you don't, you're out, kind of thing. And people yelling at each other because the spreadsheet was wrong. None of that ever happens at my company. No one ever. It just doesn't ever happen. We don't allow it. We're humans. We take care of each other. We support each other, and that's it. You're sick. We'll see you tomorrow. Sure. There's no forms you got to fill out. It's just we're just family, right? And so he took over that role, and now he has connected us with an incredible amount of institutional investors, groups, way better lenders than we could ever get. And now I've been helping other people get institutional equity invested into their deals as well, because now we have that connection. And you just don't get that unless you're going to pay some majorly big fees, and you're going to out on the market and you're just one of a bazillion other people. There's no relationship.
Absolutely. That's awesome how you were able to connect with someone and sell them a vision. I'm sure you went out there and sold that vision for him to come on board,
Yeah.
built a culture in your business where he would feel welcome. And then you were able to leverage a lot of the skill sets he had in his previous experience to grow your business. So I think that's a huge advantage and strategic move that you pulled off there. And now, interesting enough, Sam, you also have a way of thinking when you're investing in projects that's not just considering the bottom line, where you're actually considering the environmental impact, the human impact, and you're investing. Would you talk more to that?
I've been in the poorest countries in the world, Chad, Afghanistan, other places like that. If you don't know, Chad's in Africa. It's not the name of guy, maybe a name of guy, but it's an actual country. Been in N'Djamena a couple of times. The how we treat each other matters. People matter. If you're extremely poor, you still matter. Rich people matter too, right? But culturally, people, if you don't understand something, you tend to not like it. Same with people. If you don't understand them, you don't like them. I've seen just incredible intertribal racism. I've seen just incredible things around the world. And, I come back here and they say, well, I can't, I don't have the funding. I could go work for a government institution again and help that. But what I really want to do is I want to focus on Americans. And there's got to be a way to connect, money, creating wealth, making money, return on investment, and impact other people's lives, right? And so the way that I want to do that, and the way that we have been doing that, is going after very distressed properties, highly neglected, either because their owners are in New York and they don't give a crap, or they bought something and it just, they barely bought it. They had no money to do the renovations. It's now 180 units. It's just way too big for them. And they tried as best they could. They just didn't have the resources. And so we come in with new resources, new equity, force appreciation, renovate units, take over the management, radically change how they do things. We hold people accountable. Like, you can't leave your trash out here. We're going to fine you $25. And it, 2 or 3 times, okay, we're fining you for $25, and it's just a little bit enough sting that it makes people actually follow through it. And all of a sudden we will take over a property with a SWAT team is there, and there's sewer leaks all over the place. And it's like gang warfare, almost not quite gang warfare, but you go there and you don't feel very comfortable. There's drug deals going on outside. There's just like all this stuff. And we come in, we clean it up. We take care of the people. If you're bad, if it can't be a safe place because of you, then you're going to go. We're going to evict you, right? We need a clean, safe place where kids can run around and be safe. And, single moms, people can feel safe and comfortable. And that's what we come in and do. And it takes time to do that. And it takes a lot of work, a lot of effort, but the return on investment is fantastic. And return on impact is fantastic. And I could talk for an hour and talk about health outcomes, educational outcomes that improve, reduction of transients within a community, because you're talking about hundreds of investors. I could talk about all the numerous charities, nonprofits, government organizations that we work with to make sure that our tenants' rent is paid for, as long as they're abiding by the standards of whoever is funding their rent, that they're working towards getting their own jobs, if possible, or whatever they need. And guess what? When tenants pay rent, that is great for investors, right? It's great for us.
Mm-hmm.
It's great for the tenant. They're paying, right? If you're stealing something, it's always in the back of your mind that you're doing something you should not be doing. And when you're not paying rent, you're stealing from us. We're paying for you to live there unless you're paying to live there, right? And it's also not fair to other people who are there. Maybe you're just not ready and you need to go live with some family or get your life back on track, and that's okay. But we do all these things because it makes a difference in people's lives and we actually care. And 2, because it's great for investors, it's great for the property, and we decentralize poverty in the process. And it's amazing what happens but it can be hard as an operator to communicate things like this when they take time to happen. And when I go to market and I say, invest in this really cool deal that looks uglier than sin and it has crime and we're going to fix it all. And it's hard for a lot of people to overcome that when they can go invest in a, beautiful property in Florida with all these palm trees that's gorgeous and faces the ocean. Oh man, they just clamor to throw their money at that. 10% return, wonderful, we're in.
Right.
Here's this ugly deal. We're pretty sure we're going to get a 20% return. We're only going to tell you we're going to get a 15% return. And it just ends up being a different game.
No, well, it's interesting since you mentioned that return on impact, right? And you're working with institutional investors. How do you balance that, that mission-oriented perspective that you have to investing with essentially still hitting your bottom line numbers when you're, connecting with, say, investors and institutional investors specifically?
I learned this in Afghanistan, working with Afghan docs, that this guy over the whole North region wasn't supporting his people. It dawned on me one day, just a stroke of inspiration, divine intervention, just align incentives. And so I sat there thinking about what his incentives were. And I realized that if he had, like a military, the more people you have under you, the higher rank you should be. Okay. And so I related that to him. It's like, you have all these people that should be at all these hospitals and clinics, but they're not getting them. You're not supporting them. If you support them, now your budget triples, your amount of stuff you have, triples, the amount of people you have doubles. I'm pretty sure you're supposed to be a general at that point. And it was just like the light bulb went off in his head. And 6 years of Americans and Canadians and others, coalition folks, trying to teach this guy how to take care of his folks. That comment changed his life. And the very next day, these clinics were calling me saying, oh my goodness, Dr. Whoever is getting us new people and he's getting us our stuff we've been asking for years. So the same thing applies here. So there are institutions who want to make money helping others. But if there's no margin, there's no mission. We have to make money because it has to grease the wheels. It has to be repeatable. We have to be able to hire staff and grow and continue to do this. I don't need a Ferrari. I don't care. I drive a Toyota. It's a nice one. It's an Avalon, right? But I don't need that. I don't need a big house. I live in a 1,600 square foot house with my wife and kids. What I need to do, what I want to do is make a difference. And so we need to make money to create more differences or to impact more people's lives, to continue to do this so that we can grow and grow and grow. And so we do have to raise rents. $400 a month is too low. We cannot sustain that. The market will not allow us to sustain that. But we also improve the quality there because we own our construction process. We keep the cost down really low, half, sometimes only 3/4 of what anyone else will do it. And we get it done ourselves. And it's just been amazing. It's been difficult. It's been challenging. The crash of the market's hurting us, just like it's hurting everybody else or most people, but it's totally worth it. And we're still profitable. We can still be profitable.
Fantastic. That's a very, very interesting perspective and profound to make certain to always look at what the incentives are of every party involved so that you can align those incentives and align those interests to be able to meet whatever vision, whatever mission that you're set out to. So thank you for that, for sharing that lesson that you learned out on the battlefield. Well, we're winding down and we get to the part of questions where we like to learn a little bit more about your journey and then your past. So Sam, if you could wave a magic wand and change one thing on your real estate journey from the beginning, what would that one thing be?
I would have paid for a coach or a mentor.
And why?
Financially, I would have millions of dollars more in my bank account, and I could do so much more. They would have cut down the learning curve. They would have helped me avoid some avoidable mistakes that I just did not know because we had never been down that path. We ended up trusting people that I should never have trusted because coming out of the military, I just had this impression that there's some level of integrity that society has, but that's not true.
Mm-hmm.
And so that's why you have contracts and you build those things in. but we did not. I, walked into, some situations that I almost had sucker on my head because I just trusted what people were saying and what they were doing, but they were just setting me up to get me. So there's mistakes that could have easily been avoided. And then a deal we would have made $10 million on fell because we made some early mistakes in that process that caused us to not be able to close the deal. And had I gotten a different commercial real estate broker, had I used, like the guys I have on my team now, we would have closed that deal and I would have made $10 million the past year just off that one deal. It was incredible. But coaches and mentors. And so now I offer coaching. It's a ridiculously cheap price, and I do teach because I've gone through such painful experiences through this and such incredibly awesome experiences through this process that I just want people to understand that there's a ton of hype out there and that stuff is real. You can really do that. You can close a deal and make $1 million in cash into your pocket. That is 100% possible. I see it all the time. It's not how I structure deals, but that's how other people do that. You want to do that? Great, do it. What I want to do is share the other side of the story and say, look, you do this, it'll take you down a path that you do not want to be down, and you will fail at the beginning and you may not be able to recover. So do this and that, set it up this way, go down these paths, pick partners that, anyhow, and just really help insulate beginners who are going to fail right from the onset so that they can have great success like you have. And I'm positive you have mentors in your lives that you take questions to and help you. Absolutely. Every successful person does. Everyone does. Elon Musk, I'm sure he has people he goes to, like a mastermind or others where he bounces ideas off of them. Just if you don't do that, you're being really dumb. Sorry.
Right.
And I was that guy in the beginning. I was really dumb.
Well, it's important, right? It's having that person who's been there, done that. They've taken the lumps probably several times, right? That can see what you're going through, know what you're going through, and even predict what will happen just based on their experiences and even probably the experiences of their own mentors, right? To be able to help you to avoid those gaps where you are and where you want to be in a more efficient and effective way. So thanks for that. And also, what's something that you're working on right now that our audience, our listeners should know about?
The market's improved and we got some mobile home parks that were coming back, and now we're getting new homes and we're restructuring them and we're going to fill them. And so we're going to be looking for investors on stuff like that. And not today, but sometime in the future, potentially. But we are always trying to make an impact, and we're always trying to change the world around us. And if you're interested in doing that, please reach out to me or find another person who does the same thing. There are people like us out there. I don't know any. I know of a few that are trying to do the same things we're doing. They're just not as big as us, or they're so big that it's impossible for small folks to get involved in a meaningful way. But you can with us.
Right. And I know our folks will want to reach out to you. You've dropped a lot of gems on the podcast today, and we thank you for that. So what are some of the best ways that our folks can reach out to you and get connected?
Yeah, reach out to me. Send me an email, info@wildmountaincapital.com. It'll come right to my box, info@wildmountaincapital.com, all spelled out. You can go to our website, wildmountaincapital.com, reach out to us there. And you can find me on Instagram at Clean Money Sam. I like to talk about clean money, how we invest our money makes a difference. So it's clean. It's like the food you eat. If it's clean food or it's dirty, you know that what you're doing is good for you when you put it in your body. Clean money is all about investing in a way that's good for you and others. And you know where the money is going. Stocks, you have no idea where that money's going. You just bought somebody a Ferrari. Thank you. Mm-hmm. And, LinkedIn, I'm on LinkedIn, Samuel Sells, Twitter, I'm on there too, usually talking about affordable housing and various policies or procedures, things that are going on in the US. They either help or hurt small-time Americans.
All right. Fantastic. Again, Sam, it was a great having you on the podcast. Thanks again for being so transparent with us and sharing your experiences, your knowledge, and allowing us the opportunity to be able to leverage that knowledge to, reach our goals. You're more than welcome to come back on the podcast, and I look forward to one day having you back on the podcast. Thanks again.
Yeah. Thank you so much, Dorrance. This was really fun. Enjoyed speaking with you.
We trust that you enjoyed today's show. Visit archcapital.ventures to learn more about how you can leverage real estate investing to improve your life through passive income, financial freedom, and generational wealth.